Welcome to the Real Journey of the Entrepreneur. The journey of any entrepreneur begins with a decision, then writing down your vision, then the execution of that vision. It is not for the faint of heart. It is for those who understand how powerful your mind is and that you can truly create the life that you deserve. It does require a unique formula that includes belief in yourself, a lot of consistency, connecting with an OG, a lot of tears, missing out on a few events and things, and taking a whole lot of risks that will allow you to see your vision and dream come to pass. This journey of the entrepreneur is from the perspective of a wonderful mother, a business owner, whose goal is to break generational barriers and normalize the process of wealth building and financial wellness through entrepreneurship, all while creating a social and give back along the way. I am sharing this journey with you and invite you to share this process with me. Let's do this together. It's my own, but you have to feel comfortable to own it.
Yeah, absolutely.
Right? I will always support you.
Thank you.
Well, hello there, good people. We're back. And yes, we're back with another episode of the Real Journey of the Entrepreneurship. I am ever so grateful to have you continue to join us on this journey. It is one where we are loving the opportunity to provide you with information to help you to grow and scale your business and pass it along to those who may be interested in joining you along the way. My name is Anita Pierce, and I am the host and producer of The Real Journey of the Entrepreneurship. I am also the founder and CEO of 11375, where we are excited to present to you and connect you with the opportunity to be able to learn more, to grow, and to be able to share all that we're doing and create the space by living and dreaming and creating. Our business is certified as an MWBE, and we are working in the space of project management. And we're happy to present this as a part of our process and share our journey with others who have stepped into the space of joining and having taken courageous steps to be able to join in this space of living their best dreams in their lives. And I'm excited today because part of our learning on this journey deals specifically with talking with other organizations and other entrepreneurs who share and have courageously taken a step into the space of being a business owner and making the decision to be able to create their journey day by day. I can tell you that being in this space, going into my 8th year, the space is not one for the faint of heart. And when you make a decision to join on this journey, it's a day by day process. And so welcome to the ride. I say every single day that I have the best seat in the house when I have individuals who are, supporting small businesses to help them to navigate and to reach their goals and dreams. And my next guest is one of them. I have the good fortune of interviewing Amy Martinez, who serves as a loan officer, the AVP and loan officer. And I have to tell you that through asset-based lending, they're one of the top organizations that does what I call non-traditional lending. And Amy will be able to describe in more depth what her organization offers. But just a little peek into little Amy's background. Amy graduated from the University of Montana with a bachelor's degree in communication studies with a huge emphasis on human and family development, and then transition into this space of financial services and a long and rich career in financial services. So needless to say, Amy's pretty dope. Is a mom, and I have to tell you, not just a mom of one, because as you've been watching my show, I tell you I got one, and she's like 5 kids, and Amy has 2 beautiful children. But enough about me. Let's just bring Amy on, because clearly I don't always do the best jobs of intro. Hey, Amy.
Hi.
How you doing?
I'm doing good. How are you?
Good, 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 good. So we are here. First of all, welcome to the show.
Thank you.
I'm really, really excited to have you start by telling us a little bit about what's not in the public bio. Tell us a little bit about yourself.
Not in the public bio. Okay.
Mhm.
Well, so if you want to ask me stories about myself, usually I have to pick from a litany because there's just so many different things I could talk about. What's not in the public bio, I guess. I mean, you heard that I went to Montana, University of Montana. That was actually where I was born and raised. Being in New York, that could be like oh my goodness, I've never met anyone from Montana. So I guess that's probably something to like throw out there. It's kind of interesting about me. Um, I do have 2 kids. They are actually twins. They are 3.5. It's crazy. I love being a mom. It's the hardest and a most difficult thing I've ever done, but also the most rewarding.
Mhm.
I'm trying to think what else is not in the public bio. I consider my sales journey to have started back when I was in college and I was a waitress because I learned a lot of my sales techniques by there, upselling, working tables, trying to multitask, trying to be like the best in that space. So that's where I consider when I started sales. I did 10 years in the restaurant service industry. So I love that. Trying to think of what else would be interesting. You'll never know the natural color of my hair. I always think that's a joke to say because I have not stopped dyeing it since I was 14. So I'll probably never know when I'm gray either because it's just going to be this perpetual dye job, which is fine. Eventually I have to embrace that, but I just won't know when that is. I'm trying to think of it. I'm the oldest of 6 girls and I have an older brother. So I come from a really big family. And then basically I've been on the East Coast since 2008. So I've been here for a while. And obviously I like it because I stuck around, but I don't know. Do you need anything else? How much else do you want to know about me?
No, we're not going to ask you for your blood type today. Not
All
not
right.
today. Maybe another time. But do tell about your process into this space of finances, financial services. Because one of the things that as a coach, I find that when I'm coaching, that conversation about any aspect of money, finances, always put a chokehold on us as business owners. So why
Mm.
did you transition into that space? What was your love about the space that you're in now?
So that actually is a really good story too. Probably longer than we have time for today, but I'll try and make it a little bit brief. I actually,
Mhm.
because I was one of, um, well, I grew up with 5 sisters, um, and we didn't really have any money.
Mm.
So I grew up in a scarcity household. Um, and then I also didn't learn any money skills at home either. And then I went to school, and there wasn't really anything there that specifically talked about money either. So I graduated from college with a very basic understanding of money, but not a very good one, which I think is really a detriment to our society in general. I think by that time you should have a really good understanding, but we usually don't. And I find that now, and I also found it back then, but at the time it really wasn't on my mind. I moved to New York and got recruited by what I thought was going to be this amazing job. It was the insurance industry, which there's great people in the insurance industry, but it does have a really high turnover rate. And because it's hard, but also because it's an easy job to get into, but a really hard job to stay in. And that was when I started learning about money, but I also learned about it more personally, not because I was selling insurance policies, but because I was in a commission only job. And now suddenly my income was really important. Back when I was in school, it really wasn't that big of a deal. But now I had to take care of myself. I was in New York by myself. I had rent to pay, bills to pay, health things to deal with. And so I started to get in this like really weird space of income and no income and income and no income. And that was when I started to like learn about credit in a really hard ways, because it took me years to pull out of the debt that I created back then. And so that was like my first experience with like, oh snap, money is kind of like this thing I should probably know about. And then I'm also the kind of person where I don't like to talk about things unless I have a good grasp on it, or I try to be a pro in most things that I actually want to talk about. So I learned a lot in the insurance industry as well. But the stress of having that irregular income by myself caused me to go and move to a different company for more stability, and that still didn't work. So then I actually moved into banking, which kind of started my lending career, because at a bank, I could do the same things. I was still doing insurance and investing on platform, but I had this like steady paycheck. And then suddenly I realized, oh my goodness, this is like amazing. I didn't know what this felt like. And at that point too, it was so interesting now, because I haven't thought about this in a while. I had that credit card debt, right? And one of the things it was doing was holding me back, because it was impacting my credit. It was also like, you know, I'm having to pay this minimum payment, but I'm still under this stress of trying to get out. And at that bank, it doesn't really exist anymore, which, so, you know, it's too bad, because there was a guy who does exist. Actually, there's a guy who helped me out. And I said, hey, I went to my boss. I'm like, do you think we would do a personal loan for me? And banks aren't really big on personal loans. And back then too, not a really big thing. And they were like, yeah, no, your credit's not great. And I'm like, but I'm just telling you right now, if I could get out of this particular card that was driving me down, it would make my life so much better. And this guy, the head of lending, my boss went to him and said, hey, can we get her a deal? Can we get her a break, whatever, and do this one time? And he said, yes. And believe it or not, that was huge for what happened afterwards, because it got me out of some things that were really difficult. And all he had to do was say yes. He took a chance on me. And I had to back that up by saying, yeah, I'm going to pay this bill. And that was like just a huge turning point for me. So in that position I was at, I started learning how to do home lending and home equity lines of credit, et cetera, et cetera. And then that same boss who helped me get that loan, he was like, hey, I'm heading to a credit union. You should come join me. I think it's going to be better. And so I did. I went to a credit union as a branch manager, actually, and was there for almost 8 years. And during that tenure, basically, I learned so much about money and so much about credit. But I also learned how much people don't know. So like, as I've progressed from my own experience, and then also as I work with people, like for me, I really want to educate all the time. And if anyone ever comes up to me and says, hey, teach me what you know about money, like I'm the first person to say, hell yeah, because I know it's that important, but I'm that passionate about it, because I feel like, I mean, I went through some things that helped me get to where I am now, but had I had some better knowledge from the beginning, I would have avoided so many pitfalls and heartbreaks. And I know I'm just talking, so cut me off whenever you feel like this is necessary. But it really, that was like the background that kind of drove me, that just kept me moving in the financial space. I never thought I'd ever be in finances, and here I am, or finance, and here I am, like what, 15, 16 years later. So yeah, long story short, but not that short.
No, this is why I appreciate listening to everyone's starting point, or the places where they've come from, because it helps to drive a lot of what we do as business owners, and and to help to understand when we're going and speaking to certain organizations, we get like a real story behind it. I believe that everyone, whether they want to tell it or not, has a beautiful process, even though the starting point may not always have been pretty. So I won't cut it off, because it was very helpful, because it allows me to pivot into the next question, which is your current work, right? So I read that you're the master connector. Like, what does that look like for someone who is interested in your space? Tell us a little bit about that.
Okay, good question. And I try to live up to that. It's my goal in life, and it's been my mantra for my career for a while. And the reason why, I learned maybe 5 years ago, anyway, through when I was at the credit union, I started doing a bunch of business development and networking. And I realized that one of the best ways to build rapport and trust is to have something that somebody needs. And it's not always going to be what you have on your day jobs list, right? So right now, what I do at ABL is very niche. So the products and services that I offer are for a very specific population. But in working with them, or the people who want to be in that space who are already there, I meet all kinds of other people, and I love to network to like enhance my community and my like reach, so to speak. And so what I try to do now is every time I meet someone, I first try to figure out what it is that they need. And if I don't have that resource, I'm going to find it for them. And then I'm going to learn what it is that they do, so that if I find that they're a solid, reputable person who I can trust, then I can use them as a resource for the next person I meet. And in doing that, I'm hoping to create, if I haven't already, a place where if someone's like, I need such and such for so and so, they say, Amy probably knows. And it might not have anything to do with what it is that I do during the day, like my day job. But they know that I can be a resource. And my hopes in that is that I've just become trusted in what I'm saying, regardless of whether it's going to be my job or not. And then when somebody does need something that I can specifically do, that trust is already there. I've already built that platform of knowing that I'm not, I'm going to get it done, and I'm also going to do it the right way, if that makes sense.
That makes a lot of sense. So with ABL, describe what you do there, and
Okay.
what is ABL?
So quick background, when I was at the credit union, my last position there was a true commercial lending officer. And I really liked that, but wasn't able to really move the needle there like the way I wanted to. So I decided to try and find something different. And I ended up actually getting into another position, the one right before this, thinking I was going to be a commercial lender again. And then it ended up being private direct money, which is totally different. And so I was like, this brand new world opened up to me. And it was so cool because I was used to someone would come to me for a loan request, and I would have to ask for all their financials, ask for all their information, like pages and pages and pages. I'd have to write a narrative on them. I'd basically, like, I would joke, I'm going to ask for everything except for your firstborn child, because this is how we underwrite. And I came to this space where it was so much more simple than that. We don't want to see your tax returns. We don't want to see all this other stuff that you're doing. We're really going to focus on this particular scenario and this property that you're either going to purchase and hold or purchase and rehab, and then may possibly hold, and that's it. So I was like, this is amazing. And what I do now is particularly, it's only residential real estate, but I'm able to offer to new or existing investors the chance to scale their real estate business without having to ask for any of their tax returns, W-2s, or pay stubs. And the reason why that's super important is because, well, for a few reasons, especially since COVID, we're in a gig economy, or everyone wants to be an entrepreneur, right? So you're not going to see these traditional pay stubs or W-2s at the end of the year, or maybe you see 10 different W-2s, and then a bank or credit union is going to be like, oh, that's a little like not consistent enough for me, so we don't like it. But like basically, you're also seeing a lot of people in the self-employed space that are in real estate already, but they don't think that they can be an investor. But when you're coming to a company like the one that I work for, we're not going to care about that day job. We care. We'll ask you. We want to know what you do because we want to get to know you. But when we actually underwrite the loan, we're not looking at all that other stuff, which is tremendous for people who are in a position where they can't show a traditional income stream. And that's more and more common now than I think probably ever has been before. You don't even see people in jobs for like 20, 30 years like you used to. Now people kind of change jobs like every couple of years, and that's cool, I guess. I mean, I guess it's, most people say, oh yeah, that's normal now. And that may or may not work for a traditional lending source. So I really feel happy to be where I'm at, because it just relieves a lot of those barriers and takes them away, so that we can really look at people and say, hey, let's help you scale, or let's help you get into this space for the first time, and I can partner with you to do so.
So I have a couple of questions, right?
Yeah.
So when I think about an understanding at a very, very baseline level, right? So I'm not as experienced in your world. When I think about what you just described, there's two things that come to mind. One, that it allows those who are um, new to the industry to allow them for an opportunity
Yeah.
that didn't exist if they were to go to traditional financial institutions. That's the first thing that I see.
Yeah.
The other thing that I also have a follow-up question is about the no docs, right? The heavy no docs, right? So for those who may look at that, they may say, well, how is it that I'm gonna get approved for this specific dream that I want? Because that's what it sounds like. It sounds like you all are helping to fund dreams. That's the way I'm breaking it down. So how does that work? If I was to come to you and say, you know what, Amy, I am interested in this specific building. It needs to be rehabbed and all type of stuff. Would you mind walking us through maybe less than 5 minutes if you can, what that could look like for the Anita scenario?
Okay. Yes, absolutely. So first of all, the company I work for, Asset-Based Lending, is only going to work. That's all we've ever done is work with residential real estate investors. And again, this could be somebody brand new. So let's say, Anita, you come to me and you've never done this before.
Mhm.
A lot of people will say, well, either A, what's the catch because it sounds too good to be true, or B, like, what if you're not looking at my financials, what are you looking at? And it's a really good question. And I'm just going to start with that because they're very important things to know. So we focus our underwriting and loan making basically on credit, liquidity, and cash flow. What
Mm,
that means is on the credit side. So we're going to do our lending to an entity, but those entities have to be made up by people, physical people. And while we're not looking at your tax returns, all that jazz, or anything else, we are going to pull a personal credit score on you. The reason is because even though the entity is the borrower, you're still the one that's physically making those payments. We want to make sure you pay your bills. We're very generous in that space. That the credit score doesn't have to be super high, but we're going to look for any past foreclosures or bankruptcies within the last 3 years, and just make sure that, like, you pay your bills. If you're not paying your bills, the risk is much higher. So you're probably going to have to work on that first. But I know you talk a lot about credit, so I know you have those places to go. So definitely hook up with Anita if you're in that space. But let's say your credit is good or decent. We're also going to look at liquidity. So if you're going to go into a project to flip, for instance, like you're going to buy a dilapidated property and you need to give it some rehab, whether that be cosmetic or extensive, we're going to need to see that you have some money towards that purchase. And then you also have reserves for contingencies. So you will have to have some capital there, because we're not going to fund you 100%. So we're going to look at that. And then if you're going to be in a position where you sell the property, we want to make sure that it makes sense for you. You're going to make some money in that case, that you're not just going all in and then coming out with exactly what you put in. It's supposed to make you money. That's the goal of our loans. It's because if you make money as the investor, everybody's making money. It's a successful project. You're going to go on and do the next one and keep coming back to us. So we want to see that if you're selling it, you're going to make a profit of a certain amount, so that it's good for you. Or if you're going to turn around and hold it, which is also possible through us, that you're going to have that equity there that you need so that you're always in a space with equity. We always want to see that you have some skin in the game because people with equity pay. It's your money and you don't want to leave it on the table. So you're going to make sure that that asset performs the way it needs to so that everybody's happy. And then if you're going right into a property, let's say you found this townhouse or a 2-family or whatever that you're like, this would be a perfect rental, you're going to go in and have a down payment of your own cash, making it so that we're not all on the hook. And again, you're putting your own money into the deal so that you feel obligated to pay it. Otherwise, you're going to lose your funds. So we're going to look for that there too. And then on that same level with a property you want to hold, we're going to look for cash flow. And cash flow, really simply put in this scenario, means is the income from the rent going to cover the expenses of the property at least 100%. A good deal is going to be 120%. Bare minimum is 100%. But if you're going to go in, especially as a purchase, we can talk about this, but you want at least to be 120% because you want to make money. You don't go buy properties just to hold them and say, hey, I have this house, but it's running me dry. You want it to be producing income for you. So we're also going to make sure that you're in that space as well. And through all that, you've got someone like myself, who's your loan officer, who could talk you through it. It's not like you go out and you have to figure it out. Like, we have resources. Our website has this great thing where you can do a flipping calculator and you can see if you're going to make any money based on a project you're looking at. We work with investors for investors. I think that's all we do. So we're a really great resource for that. But that's kind of what it would look like. You would come to me and tell me either you want to do a flip or you want to do a hold or a flip to hold, whatever. And we're going to look at those numbers and really break it down and make sure it makes sense. And for you, you're going to bring a decent credit score and you're going to bring some cash, and then we're going to make it happen. Hopefully that answers your question.
That answers perfectly. So the average credit score, would you look at someone who has like a 640, 660 as a starting point to help to build relationship, or would you ask them to do some work before they actually come back to you?
So on the 30-year side, when we're going to we use a loan to buy and hold, that minimum is 640 across the board. We really don't have any wiggle room there. But on the short-term side, which would encompass like a fix and flip loan, that sort of thing, we're actually lending our own money. So we do have what we call a minimum credit score. We try to stick around like 640 at very bare minimum as well. But that being said, there are people we've worked with that have had less, simply because A, we have a relationship established with them, or B, there's a knowledge of where that score is at, and we're able to kind of overcome it with some compensating factors, which is it's a whole other subject and topic. Yeah. So we won't get into that. But we are able to look at each person individually, each situation, and really break it down, which is the benefit of working with a company like ours, because we're really relationship based. So it's not just like, here's the boxes, do you fit into it? The answer is yes or no. That conversation can really bring up like either being a little bit more creative or doing something a little bit differently, or just having a really good understanding of you as the borrower. So we're able to make it happen.
So what your business, your line of business, is known as hard money lenders, right? And when you hear sometimes in the market could be perceived as predatory, how do you in your organization, I guess, mitigate what's on the street, right? Because when you think of hard money lenders, you are in business to make money, and typically your interest rates are not like what's happening with the average market. Right. So how do you minimize that?
Well, I'd say there's two things that I would like to address in that question. The first one is like the predatory / like, people are a little wary of hard money lending, which I totally understand. And I wouldn't blame anyone at all for feeling that. If you're not familiar with the space at all, especially if it's like, you just hear it and you're like, oh, I've heard bad things, like that makes sense. But what I really tried to have people focus in on is, in every industry, there's going to be the good, the bad, and the ugly, right? So you've got to know that this is just like that. I'm in a lot of Facebook groups for lending, and a lot of them are private hard money Facebook groups, and I'm always trying to get my name out there. And even I am shocked at how many fake profiles, how many bots there are, how many maybe real people, but they're offering ridiculous terms, or they're taking your money and not doing anything. I mean, there's a lot out there. So it's not something that's like unusual to be like wary of this space. If you're looking to come to someone in this area of lending, I would say just really do your research, because like, for instance, ABL has been in business since 2010, and that's a nice long track record. We were open during the pandemic, which a lot of places weren't lending during the pandemic, but we were, so that's a huge like plus in our favor. And then also just like transparency. We've got people you could talk to, people you can call. Our back office will answer the phone. We're never going to send you to a 1-800 number. When you're working with us, like for instance, if you were to be that flipper and you did that first fix and flip loan, there's a draw process afterwards that you have to still go through in order to complete that project. You're still working with us at ABL. The same person who underwrote your loan in one chair is now going to be just a few chairs away from the person who's calling you on the phone to talk you through your draw process. So it's like, it's very relationship based. It's all the people that you can literally grab on the phone. Those are the kind of stuff you want to look for, and really vet out, because there is a concern that you might go to the wrong person. Oh, and then I'll say this in general: never, ever, ever pay upfront fees for any lending. I'm just going to throw that out there. because that I see that happen all the time. People get screwed so bad because they just waste money, and it hurts my heart because it's like I know that there's better out there, but I'm putting that out there as like my Amy's tidbit of the day. Never ever pay upfront fees to the lender directly. Now, third party is like your appraisal and all that stuff. That's legit, but never give money to the lender upfront if you don't have a term sheet in hand. But then something else that you said, I'm trying to remember, go back to, like, that's kind of how, like, the hard money space, I guess. What was the other question? What was the other part of your question? I know that you said it could be known as predatory, but there's something
So
else
my
there.
question is, and within your agency, how do you try to minimize what's out in the street about, hard money lenders? Because when you
Right.
do, to your point, there is so many bot scams, fraudulent practices through the social media platforms, through people still mail stuff. So how do you have someone break through the noise to be able to have a success with your agency?
Okay, so again, knowing the right questions to ask, and that kind of goes back to, like, I like to educate people too, and if they don't end up using me, I have already created a list of questions to ask a potential lender, just in case you want some, like, good FYI. I can send it to anyone. But just looking for the things that I was kind of mentioning, being able to get on the phone with a real person, having a track record that you can view, and you can go onto our website anytime. You can see actual deals that we've done. You can go onto our Google page and see reviews if you'd like. But really, it's just being able to get in touch with someone and develop a relationship. And, like, the cool thing about ABL is, like, one of the people who founded the company literally still sits on the main floor of our headquarters with the rest of the loan officers and processors and whatnot. Like, they're real people who you can access, and that's, like, huge, because a lot of places you're not able to do that. So I'm not going to say there's, like, this magic being, or, like, yes, you're legit, no, you're not, but it's a lot of asking questions and knowing what to look for. And then, like, me personally, I just like to educate people as well. So that's, I know I'm part of ABL, but that's also part of my goal in life, is to make sure people have the information that they need. I hope that answered your question.
No, it does, and it lends to the responsibility on both the borrower and also the lender as well, to be able to support one another through the process. Because I can think back to when we purchased our home, it was as much as I consider myself a really smart and intelligent, capable woman, it still wears a lot of gray, especially when you're looking at, the documents, and, you generally don't read them while you're sitting there. It's like the after effect. And then you're looking at the 300-page document and you're like, I just signed my life over. So it becomes like one of those things where, to your point about becoming very well educated and being mindful about, things like, how many spam calls do you get nowadays, right? Are you going to give over, important information over to someone that you don't do business with? Those are the things that I feel like you are elevating, and it becomes really critical that we as business owners or investors are really doing our due diligence, but also finding and building the right relationships. Which means that we essentially have to talk to folks. We have to talk to people. So
Yes. Talking to people is essential. And when I would say, as a follow-up to that too, you can talk to people about ABL, and you're going to get, so far everybody's like, oh yeah, I know somebody who used you. If it's not like one of my own borrowers, like, I'm like, okay, well, how was your experience? Like, I always want to know. And so far it's been great. They've used you for this, or they used you multiple times. And that goes back to what we're doing now too. And I think it's a really important thing to highlight, is that at asset-based lending, 65% of our new business is a repeat borrower. And that's huge, because you can go into something for the first time and have a terrible experience, and you're probably, unless you're a sucker for punishment, you're not going back. So yes, you could have done it and you could say, I was a borrower of such and such, but are you going to be a borrower again? If the answer is no, that's a red flag, right? Why didn't it work out? But if you're coming to us and you're like, yeah, this worked out really well, I'm going to go to you for the next one, and then the next one and the next one. I mean, that helps us too, because we like to create relationships. It makes underwriting so much easier. But also, it's a huge testament to what it is that we do as a business, because it means that you had a good experience. We weren't a scam. We did you right. Your project went well. You're coming back to us. So ask people, like, who have you used more than once? That might be a really good question to ask. Or just, what have you heard on the streets? Because people are honest when they don't have anything, they don't care either way. And so far, the honest feedback's been pretty good too.
So now I want to jump into your ABL's types of loan programs. So
Okay.
there were, I think I counted like 8 of them, including the, rental loans, fix and flip, multifamily, new constructions, and first time investors. But there was one that I was really curious about, and I was wondering if you would elaborate more about the 2-year bridge loan. And
Yeah.
what does that look like, or for someone who would be interested in that?
Okay, that's a good question. So we created the 2-year bridge loan, 24 months, particularly because this recent market, which has been crazy.
Mhm.
If you're not in the real estate or mortgage industry, then you might not know. But if you are, it's been a wild ride for the last, I think, almost basically a year. Last June is kind of when it
Mhm.
started to go haywire.
Yep.
We realized that because of the market, there's a few things happening. And this is going to get a little technical, but I'm going to say it anyway. Before the market went crazy and the rates were way lower, and we were spoiled, by the way. That was not normal. We're in more of a normal space now, but people can't quite catch it yet because it's been so long that we were spoiled. We would have, again, going back to a property that cash flows, you would have a mortgage loan, right? And those expenses had to be at least, or they had to be covered 100% or more by the rental income. Those expenses include your mortgage payment that you would take out with us. And part of that mortgage payment is interest. So if you have a low interest rate, you've got a lower amount that's interest. If you start to get a higher interest rate, now your payment's bigger because you're paying more in interest, but your principal payment's still the same. You still have to amortize it over the 30 years. So you're paying a higher payment because the interest rate's gone up. That's the only difference. What's happened is that now, because the payment's higher, those rents that were the same, a lot of them are the same right now as they were a little over a year ago, aren't able to cover now 120% like they used to, because now your payment's higher, so therefore your expenses are higher. And now this thing called DSCR, which is another term that we use, it's not where it was. It's tighter, and so loans aren't qualifying quite like they used to. So what we did is we realized we needed a product that maybe didn't need to have that tight of a DSCR, because we're not sure where the market's going to go. So we use the 24-month bridge to basically kind of ride out that part of the market. Also, the rates are interest only, so you're not really doing much with principal, but you also don't have a prepayment penalty, which is another thing. If you get into a 30-year right now, you most likely have a prepayment penalty. And if you're this eternal optimist who thinks that in the next 6 to 12, maybe even 2 years, the rates are going to go back to where they were, you're like, I don't want to lock myself into something where in order to get out, I pay a penalty. So the 24-month bridge kind of like satisfied that too. You're not stuck in it. You've got the lending for 2 years. You can kind of ride out the rates, for either the DSCR side or the rate. But also it satisfies a need for people who are maybe want to be in a property for a little bit of time, but not stay in it forever. Because there have been, bridge lending financing was available even before the market went crazy. It's like a holding pattern, basically. So it's a way to get in, but not be locked into something, but acquire something that maybe isn't performing exactly how you want it to now, and you have the ability to either wait for the market to improve, or some people will do improvements and then they're able to increase the rent that they would be getting on that property, and now they are cash flowing like they used to be. But you can't necessarily do that right away with a 30-year side, because you're kind of capped at where that property is there. So you need that time. It gets kind of complicated, but there are specific times when the 24-month bridge makes perfect sense, and so that's why we recreated it, because it fills in some of those gaps that we needed lending for.
Can you quickly explain you mentioned DSCR? For those that don't know, what does that mean?
So DSCR is a good phrase to learn if you want to get into investing, real estate investing. It stands for debt service coverage ratio. And the easiest way to like think about it, this is what I usually say if it's the first time you've heard about it, it's kind of like a debt to income, like a DTI score on a property. So basically what you're going to look at is the debt service, and the debt service is your mortgage payment, including taxes and insurance. And if you have an HOA, it's calculated in there. And then, yeah, taxes and insurance in the mortgage payment and HOA. Sorry, I just want to make sure I wasn't missing anything there.
No,
And then your coverage ratio is how much your rental income covers the debt service. So like I said before, you have your rental income, let's say it's $1,000 a month is the rent, and your mortgage payment, including any HOA monthly, is also $1,000 a month. And that includes your taxes and insurance, by the way. It's now 100, it's 1-to-1. So this covers this 100%. What you want to see in a successful investment is for your income to be more. So you want it to, like a good rule of thumb is most people say a DSCR of 1.2, which basically means that this income is covering this expense 120%. Don't ask me what the rent or the math is on that, because I'm not good at math in my head. But you want whatever this new rent idea needs to be cover this 120%. It could be 1,200, but I'm not sure. Anyway, don't quote me. I'm just not good at math in my head. I use the calculator for everything. But anyway, the concept is there. You want your income to cover your expenses 120% or more. The higher it covers, the more profitable that loan is, or no, not that loan, excuse me, that property is, and that the better it is for your pocket, because that's basically income. That's where your income comes from.
Okay, awesome. So my next question deals with again, for those who are investors, the preparation. You did mention that you have to have some sort of capital to be able to work. Is there a specific recommended amount of capital that one should be prepared when they come to the table with, in order to,
Yeah.
or is it based upon the deal? Like, what does that look like in terms of capital?
Good question. So if you're going to go right into a property to hold, we need to see at least 20% equity. So if the property was worth 100,000, then you would need 20,000 as the down payment. Your rates and leverages in this environment are going to be better if you had 25,000, but for just all intents and purposes, 20% is the minimum. However, that can be another hurdle, right? Someone might not have 20,000 right away. So sometimes you can do something a little bit more, what we call creative, if you want to get into the flipping side. Now for this, you're going to need a little bit more than just your real estate agent, by the way. So like you're going to need to have some more resources, which I can talk about in a minute. But a lot of people will start their real estate hold career by flipping, and they'll go into a project basically to make that 20% down. So if you're able to buy property for 50,000, fix it up for another 50,000, and sell it for 150,000, now you just made 50 grand, right? I mean, minus your expenses, of course.
Right.
But now you have that capital to either go and do another flip, or to now put a down payment on something to buy and hold. So there's different ways to like maneuver to get the capital that you need. Some people will work with other investors. There's another way people have done it, syndication. It's another big word with a whole nother conversation. But there's different ways to raise capital if it's not something you're just sitting on in your backyard or under your mattress. But the whole idea is, like on the flipping side, you're making money to make more money, and a lot of times people use that to go into the actual buy and hold space. But going back to what I was thinking earlier, when you said that, it's like, how do you get into it? One of the biggest things that I talk about, if you want to be an investor, or if you're already investing and this is not the case, then it needs to be the case ASAP, is you need to build your team. And what I mean by that is you're not going to be able to do this by yourself. I feel like all the great things in life, nobody can do by themselves. They need resources, they need help, they need a team. So you're going to need people on your team, like a real estate agent, who can help you find the properties. You're going to need someone who can help you run comps, whether that be a real estate agent or somebody else in your network who's familiar. You're going to need some sort of GC or someone who knows the rehab side of things, because otherwise you're going to be walking in blind. You should probably have a really good tax accountant. You should have a really good lawyer who can help you set up your entity. Those kind of things. Like, sometimes I say before you even get to the lender, you should have those established so that everybody can work together and be on the same team. And that also goes back to, you'll have other people to be a sounding board to make sure you're not falling into like a trap of a bad hard money lender, if that makes sense. But all those things kind of work together, even if it's your first experience. Like, those are the people you should be finding for your success.
So it's almost like you're saying your personal board of directors, or having
Yes.
your squad, or if you play sports, you got to have a bench. Those things are really important. I'm glad you mentioned that. Now, for someone who is where would they find like these type of team members specific to the real estate market? What are your recommendations on where?
Well, I'm going to plug for my local RIA now, because that's like one of the first things I tell people. Find your local RIA. It stands for Real Estate Investing Association. They're all over the country. Find your local RIA and go to a meeting. I usually recommend, if you're really serious about this, just join and get in and start to talk to people in that space. Most RIAs are designed to be resources for each other. Everybody there has some sort of aspect with real estate investing, and everybody there is going to have some sort of knowledge base, or they're looking for it. So there'll be maybe you find someone who's in the same spot you are, and you build the team of you going out to make your team together. Like, you're sharing resources, whatever that may be. So definitely check out your RIA. I like Facebook because you can find a lot of crap there, but you can also find a lot of good stuff. So I like to go on Facebook and do research in there as well. Networking groups. If you can find something like Hudson Valley Women in Business, or I'm part of something called Master Networks. A lot of people are part of BNI. Like, find a really reputable networking group where you can talk to people. That's a huge place that you can find. I mean, someone might be a baker, but have a really good attorney. And so you don't know that unless you start asking questions. Like, I need an attorney. Who do you know? And the baker could be like, oh, I'm not in real estate, but I know my attorney does real estate as well. So, here's a good connection. So just talk to people, put yourself out there and network. And then anytime you can, just find some real estate agents and interview real estate agents, by the way. They're not all made equal either. So do some cold call some real estate agents. Say, hey, I want to be an investor. Who do you work with? Or get on Zillow or whatever. I'm not a plug for Zillow, but there are people on Zillow you can just cold call. Yeah, just like network, find people. But start with a really reputable networking group, in my opinion, and then also your RIA. Those are the two places I would definitely begin, for sure.
I'd say excellent. So I want to keep you for the entire day, but I'm not.
Okay.
So I want to have you, and this was very helpful. I know that the industry is there's so much more to learn. You're sharing your, more than 10 years of experience, 10 years plus of experience in a short time. So I want to, have you wrap up with a couple of things. Some real advice, because you did share some tips about, things that, investors should be thinking about, looking, be aware of. But what are some other tips that you can leave us with, to if one is really, really interested? Because yes, you did say build a team, but are there some other things that we should be looking out for as investors, business investors, and what can you share?
So one thing I would say that's really important, no matter what you're doing with business-wise. So it could be real estate investing, it could be anything. Protect your personal credit. It's so huge nowadays, and all kinds of things that people deal with. And if your credit's not where it needs to be, like, start on that now, and then keep it there and treasure it, and make sure you're doing all the things you can to keep it safe and solid, because it has such an impact on so many things. So as a business owner in general, and even in, like I said, in my world too, credit's important. That's huge. And if you need help, there are resources, so many resources, or just talking to people. So credit's really big. And I wish it was mandatory at some point in life where we had to take some sort of credit class, even if it was in middle school or high school, before we could even graduate, because it's that important to me. And I know it's important in this world, in the US at least. Trying to think of what else. I think in general, like thinking like long term and longevity, not longevity, thinking about like the generational impact that we can have. From my own experience and from my note, like I've seen other people in the same space. Like when you start to learn things as a business owner, entrepreneur, like teach the next generation, because those things that you've learned a lot of times the hard way, they don't have to experience if you can basically pass that information down. That was something that I still to this day, I'm sad that I didn't get, but it is so important to me now that I'm making sure that not only my kids, but anyone else who is willing to and able to listen, like I'll give you all the things I can tell you, because I want this community to have a better understanding of money and finances, and knowing what it is that we should and shouldn't do. And so as you're learning yourself, sometimes they say the best way to learn is to teach others. Like that's what I would encourage you to do. Just it elevates everybody, but it's also going to be like so good for the next generation. And I think personally, like that's one of my soapboxes. It's like teach people about money, like all the time. And anything you learn, share it with somebody else, because it's just so lacking, but it's so important.
So there's a couple of things that resonate with me, like really deep, and it comes from what you shared from your story in the beginning.
Mm-hmm.
And this is why I believe that stories are important. Um, the truth is, I think from hearing your story is that you don't want anyone to experience what you experience, and so your drive is connected to, come in, let me pull your ear a bit, because let me share a story of, some of my challenges. And if you really listen to my story, you won't have to go and experience none of that. Not 1 ounce of things. You experience your story, parts of your journey, but not to the capacity and what I experience. And that's what I'm hearing.
Mm-hmm.
From listening to your story to, just understanding your drive about the education piece, which is really critical. As I mentioned, as a business coach, the minute I start elevating, things like what's your personal credit score. Normal coaches may not talk about that, but if you're in business and you're really serious about this part of your journey, we all have to deal with that. And then I
Mm-hmm.
even talk about, well, what is your relationship with money? How do you really deal with that? What are your personal traumas? Because a lot of times we don't want to acknowledge that our traumas, financial traumas, have a real impact on how we manage, look at, deal with our money and finances and overall. So
Yeah.
I'm like you, Amy. I've had some experiences that are not pleasant. Never want to revisit them ever again in life. Like ever,
Right.
ever. Um, and part of being a coach, I have a responsibility. Like if you hire me, work with me through one of the other spaces, through SCORE, through the LDC, you're getting the same me, however you pick me up. And the one thing we talk about is what's going on with your credit, because when we're going to do business and have relationships with financial institutions or entities, that's one of the things that come up. So I really appreciate how you elevated the fact that we need to protect your personal credit and maintain
Mm-hmm.
it. But you even went a little bit deeper to talk about, think about generational impact in teaching what you learn. But I also want to add a comma, and that you've really experienced. because we can't talk about, anything credit, what that looks like, ebbs and flows of having income, no income, housing, no housing, unless we've experienced it. So, shout out to you for elevating that, because a lot of times, when we're having these conversations about money, we duck, we bob, we weave.
Hmm.
And
Hmm.
a lot of times that when we don't deal with the things that we need to deal with, it does not allow us to get to our next level on our journey. So,
Yeah. Yeah.
Amy, you are amazing.
Thanks. I try to be amazing in certain areas. So this is one of the ones I work pretty hard on.
No, this is the I can hear the passion behind it, and
Yes.
again, connecting the story and the why that you told is very, very, very much appreciated. So we're at the end of our time, but Amy, we're not gonna let you go just yet, not just yet.
Okay. Okay.
So I usually wrap up the show with these one word, really, really rapid fire responses. Probably the last one or two is going to be a little bit longer response. So let me know when you're ready.
I'm ready as I'll ever be.
All right. So,
Okay.
what do you do in your downtime?
I watch a lot of TV, and because love Netflix, and I play with my kids, and listen to music.
So, what do you do in your spare time?
In my spare time, when I have it, I like to create things. So I have a bunch of half started, half finished crafts all over my house. But that's when I have spare time. That, and I also like to organize. I love to organize. So there's always something, some organization project in this house that I have to get to next.
Do you appreciate pizza or burgers?
I can't have the traditional pizza because of my allergies. So I usually go to a burger, but I do love pizza as much as I remember it used to taste, if that makes
Mm,
sense.
I might have to find out what you're having because the allergies in my household. So that leads me to smoothies or ice cream.
Oh, smoothies. Can't have the ice cream, but even over that, I love smoothies. Mm,
Sneakers or shoes?
neither. I don't like to wear shoes. No, shoes.
Really? That's pretty cool.
I have a lot of really pretty heels that generally just sit there because I would rather just be barefoot.
Yeah.
Yeah, as I'm barefoot now, just
I
in
get
case
it.
anyone's curious.
Me too. But, in 3 years, what will change within the community that you are currently serving?
Oh, my dream would be that more people are homeowners, more people understand they can be investors. That helps to change, even if it's in this area of New York, change the home ownership experience, the home like the holding real estate experience, by helping more people flip houses. That increases the value of our home, the value of our neighborhoods, and overall like aesthetics, and everybody's happier. So hopefully, personally, like I've done something in that regard where home ownership and the housing community in general has been elevated.
Okay, awesome. Thank you so much, Amy. This is where you can find Amy on all of the social platforms. Please do not hesitate to reach out. Um, I had a chance to meet Amy for the first time at the Full Circle Biz Brunch experience this year. I was super excited to have someone who I did not meet initially support my business. So that was really, I was really grateful, still grateful for just this opportunity to exchange, because just like you, I learn just as much, and now can have a referral source to be able to say, well, I now know someone, right, who is in this space that I didn't know before. So this is the power of exchange, networking, and just a space of gratitude for learning. So please make sure that you check out Amy, available on all the platforms. And Amy, I'm sending you virtual kisses because that's what I do. Thank you so much for taking time out of your space.
You're welcome.
And don't hesitate to come back again and again and
Of
again.
course, anytime. I'd be happy to be here. I like to talk, especially if it's things I know what I'm talking about. Thank you for having me. I really
All right.
appreciate
Thank
the
you so
time.
much. I appreciate you.
Yes, same.
And so, yes, here we are. Again, I want to share, again, it is just really, really awesome when you have individuals who are willing to share their information and knowledge based upon their experience. Amy provided some wonderful tips. Make sure that if you are interested in the investment space, to do your research, build relationships with vendors, with lenders, and also vet. Really other great tip: never pay any upfront fees to any lenders, because that it will come as a part of the process, but definitely not upfront. Amy also mentioned build your squad. That's the Anita version, but Amy said build your team. This is inclusive of a real estate agent, general contractor, a tax accountant, a good lawyer, but also, as Anita will say, an OG, aka a mentor. And so those things are really important, but she also let us know how we can find them. Check out, the National Real Estate Investment Association, join networks, or have just really good relationship building that you can go out and find as a resource. The other thing that Amy mentioned is to protect your personal credit. As you heard Amy share her story, it's really important that you start and you learn, especially if you're entering into business, looking to become investors, that your personal credit does matter. I don't care what the social media gurus are telling you, but definitely protect your personal credit, maintain it. But also, as a step further, to think about, what you are doing to build your generational impact. Teach specifically what you are learning to close the learning gap. So, I'm not going to leave you without some information, because we are here on this show. And if you're interested in being featured, want to buy ad space, please do not hesitate to visit us, email us. We'll be happy to have you join us in our space. But also, if you need to reach out to me, here's the information. Please do not hesitate to reach out to us. We'll be happy to support and learn and grow from you as well. So you don't need to see any more of me. Please like, share, and follow us on 11375. We are on the social platforms, and also really excited to have you join us on this journey of entrepreneurship. Until then, when I think about motherhood and the space of entrepreneurship, it is two of the most scariest things that anyone who has chosen to be a mom can do. I love being a mother. I love being able to smile, share, grow, have my CEO in the making, observe what it's like to be a business owner, to be able to use the things that are coming out of my mind and create, being in meetings, doing community work, and creating a space that we want to create for long-term wealth. Both are equally challenging. Both are equally scary, but the beauty about being in this space of duality lets me know that when I see her smile, when I see her laugh, when she challenges me to be a better person, I know that I'm doing what I'm supposed to do. Welcome to 11375. My name is Anita Pierce, and I am the owner of a New York-based MWBE certified business consultancy. We focus on business education for startups, and we also connect mid-sized companies, corporations, community-based organizations, and government agencies to foster affordable solutions that will allow your business to flourish. We elevate the awareness of our communities with regards to financial, mental, and also economic wellness. Some of our services include project management, training and facilitation, stakeholder engagement, and also advocacy within the business community. If you're interested in some of our services or all of them, please do not hesitate to reach out to us. We're on all of the social platforms at 11375, or you can check us out at our website at 11375.com. We look forward to supporting you and your business goals.